All right, so here we are, brand new month, but the trend continues. You're looking at the Dow, the S&P, the NASDAQ down more than 1.5% right now. Mike, where are you seeing places to invest given this situation with inflation?
Yeah, look, we think in the equity markets, we want to stay relatively short. So think about short duration assets, which means higher dividend, higher quality, not so much paying for growth that's out 5 or 10 years. I thought the conversation with Stacey was fascinating because it's exactly the point that we're making. And that is that this is another process or part of the process of deglobalization, of the West separating gradually from China and from Russia, right? We've seen the Russian and Chinese military exercises over the last week or so coming up. So this is only going to continue. And the reason we've had deflation over the last 15 years or so since the global financial crisis has really been this sort of globalization. You make things and you buy things either where or from which you've got the lowest cost of production. That clearly is now becoming a secondary issue. And chips are a great example. There are others. And we just expect this to continue. The problem is that creates inflation, or at least an underpinning of a higher level of base inflation that the Fed may not be able to control. And right now, the markets are not thinking that way. They're thinking generally, in our opinion, that inflation is mostly cyclical, and that the Fed's going to have to, be difficult and firm, which they will be. I mean, it's very clear what Jay Powell has been saying. But this could lead to exactly more of the same types of issues where the U.S. government doesn't want the Chinese military, by the way, and vice versa, to get U.S. things going on. So we're getting to this. There's more and more evidence of this deglobalization occurring.
Why do you think that there's going to be more volatility around inflation and the way that the Fed is trying to tackle it than there has been historically?
Yeah, think about it. If inflation is simply a cyclical event this time around, like it was, say, for World War II, unlike in 1970s, the Federal Reserve can simply tighten, let the natural cycle and base effects come off from inflation and lower inflation sort of naturally, and then the Fed can take their foot off the brake a bit. The key here is that this inflation feels like it is beginning to develop a different sense about it. That is, it's not just about COVID and sort of the impacts of COVID and the boom in the economy and the stimulus and everything we saw. This is also about some developing and still relatively early, but not quite nascent geopolitical dynamics that are very different than what we've seen for the last 20 years.
Boy,
that's our concern.